An Introduction to Budgetary Accounting. What you need to know. I have a confession to make. I'm not an accountant. I'm a budget analyst who got tired of hearing accountants talking about the general ledger and debits and credits and not having the slightest idea what those terms meant. These same accountants would send me copies of something called a trial balance, which I had no idea how to read. I couldn't find a class on the topic, so I tried to figure it out on my own. The material in this presentation is what I have come up with as a basic introduction to budgetary accounting. It's helped me understand budgetary accounting better. I hope it will help you too. I want to talk about 6 budget execution events that are grouped in 3 major areas: receiving resources, controlling and distributing resources, and spending resources. The 6 events are appropriation, apportionment, allotment, allowance, obligation, and outlay. It's important to note that budget execution events move in sequential steps. That is, certain budget execution events depend on antecedent budget execution events. For example, you have to first have a budgetary resource before you can control and distribute it. And you must have controlled and distributed the resource before you can spend it. Furthermore, we are required to record each budget execution event that occurs. Why do we have to record these events? Well, Article 1, Section 9 of the Constitution of the United States requires the regular statement and account of the receipts and expenditures of all public money shall be published from time to time. In order to provide such financial reporting, some system of accounting is needed. Various laws have subsequently provided additional accounting and reporting requirements suitable for the needs of the times, and have vested organizations and officials with responsibilities for financial management. For example, the Budget and Accounting Act of 1921 required the President submit a budget and include, among other things, the expenditures and receipts of the government during the last completed fiscal year. The Budget and Accounting Procedures Act of 1950, here codified in Title 31 U.S. Code 3512, beefed up the accounting requirements and required that federal agencies establish and maintain systems of accounting that provide reliable accounting results that are the basis for preparing and supporting the budget request, controlling and carrying out the agency budget, and suitable integration of the accounting of the agency with the central accounting and reporting responsibilities of the Secretary of the Treasury. The Budget and Accounting Procedures Act essentially remains in effect, but has been amended by subsequent laws to firm up the accounting requirements. For example, the Chief Financial Officer and Financial Reform Act of 1990, known as the CFO Act, required annual audited financial statements for the United States government and federal agencies. In order to meet the requirements of the CFO Act of 1990, the Secretary of the Treasury, the Director of the Office of Management and Budget, and the Comptroller General established the Federal Accounting Standards Advisory Board, or FASAB. FASAB developed the Generally Accepted Accounting Principles, or GAAP, for the federal government. The Federal Financial Management Improvement Act of 1996 required that each agency implement and maintain financial management systems that comply substantially with federal financial management systems requirements, applicable federal accounting standards, and the United States government Standard General Ledger, or USSGL, at the transaction level. This USSGL is the required naming convention for accounting systems in the federal government. But what's a general ledger? Before computers, ledgers were books used to keep track of financial activity. These ledgers had columns and lines and looked a lot like spreadsheets we're all familiar with. Because we budget folks live and breathe spreadsheets, let's think of the general ledger as a spreadsheet with column headings identifying all the possible accounting events your organization may use and lines itemizing each event. This is an example of a general ledger that identifies some of the budgetary general ledger accounts we've been talking about, like appropriation, apportionment, allotment, allowance, obligation, and outlay. Of course, this is a small sample of some of our general ledger. The U.S. Standard General Ledger covers the universe of basic accounting events that affect the activity of any federal organization. Given the statutory requirements in the Budget and Accounting Procedures Act, the CFO Act, and the Federal Financial Management Improvement Act, it's critical that the federal government use the same set of general ledger accounts so that reporting can be consistent across government. That's why it's referred to as the U.S. Standard General Ledger. As budget analysts, we're primarily interested in only budgetary events. That is, those events that help us control and spend the money. But these laws make broader requirements for accounting systems. First, complete disclosure of the financial results of the activities of the agency. What do programs cost? How are they performing? And so on. Second, adequate financial information for management purposes. Third, accountability for assets, including fund balances, property, equipment, and so forth. Given this variety of purposes of accounting, it's important to understand that the Standard General Ledger includes different types of accounts. These can be separated into two batches, proprietary and budgetary. The term proprietary refers to ownership. In the context of the federal government, proprietary accounting tracks what the government owns, its assets, and compares that with what the government owes, or its liabilities. This is similar to private sector accounting, in which the difference between assets and liabilities, referred to as equity, is a way of determining whether a business is making a profit. In the government, there's no concern with profit and loss, so we use the term net position instead of equity. Net position, which may be positive or negative, is simply the difference between assets and liabilities. Proprietary accounting is the kind of accounting you learn in Accounting 101. That is, the type that helps capture the information required for most financial statements. In contrast, budgetary accounting, also referred to as fund accounting, emphasizes accountability or stewardship rather than ownership. Budgetary accounting enables us to ensure that funds appropriated by the Congress are spent as required by law. That is, for the purposes, within the amounts, and periods of availability established by Congress, as well as whether it meets bona fide needs. It is, of course, the type of accounting that recognizes the 6 budget execution events we led off with, and as such, the one we will spend our time discussing today. Let's take a quick look at the way the United States Standard General Ledger is organized. There are 8 major categories. For simplicity, I'll ignore the last 2 zeros, which are a relatively recent addition, and refer to these by the first 4 digits. In the 1000 series are assets. These are the things that the government owns. For example, assets might be a fund balance, property, inventory, land, buildings, equipment, and so on. In the 2000 series are the liabilities. Liabilities are what the government owes. Accounts payable, benefits payable, debt, etc. In the 3000 series is net position. Net position is the difference between assets and liabilities. In the private sector, we call this equity. The 4000 series is the budgetary set of events. This is the series that contains our budget execution events that we're talking about today, as well as many others. The 5000 series covers revenue and financing sources, or what's been earned. The 6000 series covers expenses. 7000 series gains and losses. And the 8000 series are memorandum entries, primarily for loan programs. Excluding the 4000 series, all are classified as proprietary. That leaves the 4000 series of general ledger accounts as the sole set for capturing the budget execution events we've been talking about. This 4000 series is referred to as budgetary. So, should budget analysts simply ignore proprietary accounts? Well, for the most part, whether we should or not, we do. Since proprietary accounting is concerned with ownership, it does capture the appropriation as an asset called fund balance with Treasury when a Treasury warrant is issued. But there are not any proprietary transactions related to distributing and controlling funds or spending funds until an order is received. That is, it becomes a delivered order. At this time, it's considered a liability until the bill is paid. This liability is referred to as an account payable. When the delivered order or account payable is paid, an expense is recorded and the asset is reduced. There are other tie points, but I think you get the idea. But notice, a lot of budget activity is missing from proprietary accounting. To put these 2 ways of looking at financial data in perspective, consider that the FY 2016 HHS financial statements reflected roughly $563 billion in assets, but $1.7 trillion in budgetary resources. This illustrates the fact that HHS, for example, does not retain the funding that Congress provides annually. They give it away. They give away most of the budgetary resources in the form of benefits, grants, and so forth. Though this comparison would vary among federal agencies, this just gives you an idea of how crucial budgetary accounting is and why we are focusing on the budgetary series of the Standard General Ledger of Accounts. I mentioned earlier the basic proprietary accounting equation of assets equals liabilities plus net position. Since we're focusing only on budgetary accounting, we have a much simpler equation. Budgetary resources equals status of budgetary resources. This equation should seem obvious. We know that the federal government has to have a resource before anyone can spend money. This equation is simply stating that the money you spend must equal the money you have to spend. This equation enforces the principles of the Anti-Deficiency Act, that it's unlawful to spend more than is appropriated. For anyone who's ever looked at a Standard Form 132 or apportionment schedule, this should be a familiar equation. The apportionment has to maintain the equation of budgetary resources, or what one has to spend, and the application of those budgetary resources, or what one plans to spend, by time, by category, and so on. Note how line 1920, total budgetary resources, equals line 6190, total application of budgetary resources. In fact, if these do not equal, an apportionment cannot pass validation in the OMB apportionment system. For anyone who's ever looked at a Standard Form 133 or a report on budget execution, this should also look familiar. On the 133, the budgetary resources on line 1910 must equal the status of those budgetary resources on line 2500. Let's analyze the equation. On the left side of the equation, we have the budgetary resources. These are divided into two different categories. Those resources made available in a previous year and that still remain available, we'll call those unobligated balances of prior year budget authority. And those that we receive in the current fiscal year, we'll call those new budget authority. To simplify, we'll just focus on new budgetary resources, since unobligated balances had to have started as new budget authority at some point anyway. To keep things simple, we'll just use the appropriation as our budgetary resource. Now, let's focus on the right side of the equation, the status of budgetary resources. There is a control and distribution set of budget execution events: apportionment, allotment, and allowance. And there's a spending set of budget execution events involving obligation, both unpaid and paid. Furthermore, we know we have to maintain our accounting records on a fiscal year basis. That will require us to recognize the period of availability of the resources by properly recording their expiration at the end of that period. As we will see, the expiration or closeout process will still maintain the basic equation. The control and distribution events and the spending events comprise the status of budgetary resources. This is a very important equation in budget execution. The right side of the equation, the control and distribution and spending, referred to as the status of the resources, always must equal the resources. If this equality is always maintained, you can never spend more than your total resources. And, as you will soon see, this basic equation is key to budget execution and reflects some of the major rules we have to follow. Because we're dealing with an equation, and we know that both sides of the equation must equal, we can see that any accounting entry on one side of the equation must be balanced by an equal entry on the other. This is the basis for double entry accounting. Double entry accounting has been around since the time of Christopher Columbus. It was documented by an Italian monk called Luca Pacioli in 1494, the guy in the hoodie. Double entry accounting simply means that every event has to be recorded in at least two accounts in such a way as to keep the left side of the accounting ledger balanced with the right side. Following this line of thought, The left side of the equation, the budgetary resources side, has what is known as a debit balance. The status of budgetary resources side has a credit balance. These are purely accounting terms, bear no resemblance to the difference between a debit card and a credit card. Just remember, debit refers to the left side of the equation, and credit refers to the right side of the equation. So, we come to another accounting truism. Debits must equal credits. Every accounting transaction we make must have at least one debit entry and one credit entry, and these must be equal. Since the budgetary resources, or left side of the ledger, has a normal debit balance, that means that a debit entry will increase the left side of the ledger. Conversely, a credit entry will decrease the left side of the ledger. Keep these rules in mind, as they will come in handy later. Since the status of budgetary resources, or right side of the ledger, has a normal credit balance, that means a credit entry will increase the right side of the ledger, and a debit entry will decrease it. Now, let's take a look at our budget execution events as defined by Treasury in the U.S. Standard General Ledger. First event, the appropriation, our entry on the budgetary resources side of the equation. Our first event is classified by the title Other Appropriations Realized. The account number is 4119, and since this is a budgetary resource account and is therefore on the left side of the equation, the normal balance is a debit. Note that Treasury's SGL account title is Other Appropriations Realized, and the definition tells us to use this for all other appropriations not otherwise classified. Notwithstanding this sort of catch-all descriptor, Other Appropriations Realized covers most government appropriations. The otherwise classified accounts include special accounts for debt and deficiency liquidations, trust and special fund receipts, and loan accounts, among others. If, for example, you have trust funds or special funds, you would use account 4114. But for our purposes today, we'll be focusing on account 4119 as our budgetary resource. The next event we want to take a look at in the Standard General Ledger is the apportionment. The Treasury account number is 4510, and since this is a status of budgetary resources account and is therefore on the right side of the equation, the normal balance is a credit. This account is used to record amounts apportioned by OMB available in a current or subsequent period. Category A apportionments have to make this distinction. So, in our agency, we use the extra places to subdivide this general ledger account into 4510-01, apportionment current period, and 4510-02, apportionment subsequent periods. Because funds have to be classified as unapportioned before they can be classified as apportioned, Treasury established an account for unapportioned authority, 4450, the amount of unobligated budgetary resources not yet apportioned. The need for this account will make more sense when we get to transactions. Next, we have the allotment and allowance events. The Treasury account number is 4610. And since this is a status of budgetary resources account and is therefore on the right side of the equation, the normal balance is a credit. This account is used to establish amounts available for obligation. Note in the definition that allowances or suballotments may be established at the federal agency level. In HHS, we use allowances, so we subdivide this general ledger account into 461001, allotment available for commitment or obligation, and 461002, allowance available for commitment or obligation. Other systems may use different terminology, but I suspect the accounting is similar. We have seen definitions of budgetary resources, SGL account, appropriation, and some distribution and control accounts, apportionment, allotment, and allowance. Next, we'll take a look at some spending events. There are actually 4 separate accounting events that make up obligations and outlays. There are 2 obligations unpaid events and 2 obligations paid events. First, let's take a look at the Treasury account for the obligation unpaid events. The first event is the undelivered order, obligations unpaid, account 4801. As you can see from the definition, this refers to an order that has not been received and has not been paid for. The second is the delivered orders, obligations unpaid, and its account number is 4901. In this example, we have received an order but haven't paid for it yet. Since the government has received something, this amount, referred to as an amount accrued, is considered a liability and corresponds to the proprietary account, accounts payable, which we mentioned earlier. Note that the definitions of each of these unpaid obligation events tells us that the account does not close at year end. This is important because an obligation has 5 years to be paid after expiration. Clearly, both of these are status events, and therefore the normal balance is a credit. The second pair of obligation events includes the paid obligations events. First, we have the undelivered order obligations prepaid or advanced, account 4802. This account reflects a status of payment of an obligation before receipt of the goods or services ordered. While it might seem odd that the government would pay for something before it receives anything, there are several occasions that might warrant an advance payment. For example, grant payments are made to grantees before expenditure reports are filed. These payments are classified as advances and are recorded in account 4802. Subsidies and loans are also examples where prepayment occurs. The fourth obligation event is the delivered orders obligations paid, account 4902. Here we have received what we ordered and we have paid for it. This is the only obligation event that is closed at year end. The reason for this will become clearer when we get to the sample transactions. Since all of these events are on the status side of the ledger, they have normal credit balances. Let's summarize our spending events. Obligating events occur in the 4,800 and 4,900 range. The 4,800s are undelivered, frequently referred to as UDOs. That is, they have not been received. The 4,900s have been delivered. Focusing on the third and fourth digits, if they are 01, they are unpaid. If they are 02, they're paid. Note that all 4 events taken together make up obligations, but only the paid obligations make up what we call outlays. Let's summarize the unexpired budgetary accounting equation, general ledger accounts. On the budgetary resources side, we have 4119, appropriation realized. On the status of budgetary resources side, we have 4450, unapportioned appropriation, 4510.01 and '02, apportioned current and subsequent period, 4610.01, allotment, realized resources, and 4610.02, allowance, realized resources, making up the distribution and control events. And 4801, 4901, 4802, and 4902 making up the obligation events, both unpaid and paid. This is our standard general ledger of accounts so far. But what happens after the funds expire? We need a couple more general ledger accounts for expiration. First, on the resources side of the ledger, we need account 4201, total actual resources collected, to consolidate all of our remaining budgetary resources. This is what is left of the original appropriation at the end of year one when it expires. It's calculated by subtracting all paid obligations from the original budgetary resources. In our example, the appropriation. Note that this has a normal debit balance since it's on the left side of the ledger, and it does not close at year end. Then on the status of budgetary resources side of the ledger, we first need account 4650, allotments, expired authority. All unobligated balances are closed into account 4650 in order to properly identify these amounts as expired and therefore no longer available for new obligations. Note the definition tells us these funds can only be used to make adjustments to existing obligations. We'll call these upward adjustments. And of course, we need accounts 4801 and 4901, our unpaid obligations, which we have seen before. The sum of 4650, 4801, and 4901 account balances represents the unexpended balance. That is the sum of the obligated and unobligated balances. SGL account 4650 represents the unobligated balance, and SGL accounts 4801 and 4901 represent the obligated but unpaid balance. Let's summarize the expired budgetary accounting equation general ledger accounts. Because our period of availability has now expired, we no longer need some of these accounts. On the budgetary resources side, our appropriation has been closed out, leaving actual collected resources, account 4201. The period of availability has expired, so we no longer need any apportionment SGL accounts. Our unobligated balance left in the allowance status closes to an expired status, account 4650. Our paid obligations close out to zero, leaving only the unpaid obligations. Let's look at this graphically. This is a pre-closing snapshot of the original appropriation at the end of year one. Resources are made up of our appropriation, SGL 4119. The status of resources is made up of the sum of the unobligated balance, SGL 4610.02, the obligated unpaid balance, SGLs 4801 and 4901, and the obligated and paid balance, SGL 4902. When the year one ends and the funds expire, the paid obligations are closed out, leaving only the unobligated and obligated unpaid balance. After closeout of year one, the left side of the equation, the resources side, is now reduced by the amount paid out in year 1. These resources are represented by SGL account 4201, which, by the way, equals the fund balance with Treasury, as we would expect. On the status of resources side, the unobligated, now represented by SGL 4650, plus the unpaid obligations, represented by SGLs 4801 and 4901, is balanced with the resources side because all paid obligations have been closed out and all unobligated balances have been closed to SGL 4650. Now, let's trace our budget execution events through 1 year to get a feel for how the accounting works. First, let's lay out our general ledger for the unexpired phase of budget execution. We're using our spreadsheet as a tool to represent the activity. First, note that the headers identify the standard general ledger accounts we have defined. They are first separated into the left side of the spreadsheet, the resources side, where increasing entries are called debits, and the right side of the spreadsheet, the status of resources side, where increasing entries are called credits. Keeping in mind that debits always have to equal credits, we know that if we make a debit entry, we will have to make a credit entry. Accountants refer to this as a debit-credit pair. This debit-credit pair is also referred to as an accounting transaction. Since we're representing our debit-credit pairs in a spreadsheet, we need to make sure that each transaction is reflected on a single line of the spreadsheet, and entries representing an accounting transaction on the left side equal those entries on the right side. Those of you who have had a class or classes in accounting may be wondering why I don't use the T account to visualize a general ledger account. Using a T account, the account title is written on the top portion of the letter T. Debit balances and debit entries are shown on the left side of the T, and credit balances and credit entries are shown on the right side. Account balances are at the bottom of the T. I find using the spreadsheet column heading for the account title and then stacking the debits and credits using positives and negatives appropriately helps summarize account balances and produce trial balances. This will make sense as we go through some examples. Let's use a simple fictional good government appropriation. First, we get an appropriation for $100,000. Our conference report table tells us that our $100,000 appropriation is made up of $80,000 for formula grants and $20,000 for discretionary grants. Let's make our accounting entries. Our first debit-credit pair recognizes the enactment of the appropriation. We debit, that is, increase, account 4119, appropriations realized on the resources side of the ledger, $100,000. And credit, that is, increase, account 4450, unapportioned authority available, on the status of resources side, $100,000. So why do we need account 4450? Because in the normal order of events, appropriations occur prior to the apportionment. That means there has to be a status for the funds that have not yet been apportioned, namely, unapportioned authority available. I should point out, at least in my department, the staff person, whether they're in budget or accounting, who has to enter such accounting transactions, does not have to memorize the debits and credits. As you can see from this excerpt from our Accounting Treatment Reference Manual, the accounting system allows the user to pick an event called a transaction type, such as enactment of appropriation, identified by a transaction code, in this case A104A, and enter the amount. And the accounting system automatically knows to debit 4119 and credit 4450. The next event is the apportionment. Depending on how OMB apportions funds, we could have a couple of different options. In this first example, OMB apportioned the funds in Category A, $25,000 for each quarter. So let's first enter the transaction for a Category A apportionment in the first quarter. First, we would debit SGL account 4450, unapportioned authority. Remember, a debit to an account with a normal credit balance reduces that amount, $25,000, and credit SGL account 451001 for $25,000. Now, $25,000 is apportioned in the first quarter. But what about the remaining $75,000? OMB apportioned it, but it's not available. This requires an additional transaction to apportion the funds in a subsequent quarter. Debit $4450 for the remaining $75,000 and credit account 451002, apportionment available for obligation subsequent quarter, $75,000. This ensures that only $25,000 is available for obligation in the first quarter. Note that our resources of $100,000 equals our status of resources, $25,000 apportioned in the first quarter plus $75,000 apportioned in subsequent quarters 2 through 4. But what if OMB apportioned the funds in Category B? Funds apportioned in Category B use only account 451001, since there are no time restrictions during the year on funds apportioned in Category B. In this case, we debit $4450 for the entire $100,000 and credit $451001 for $100,000. Now, all funds are apportioned and available for distribution without any quarterly restriction. Note that our resources equals our status of resources, now apportioned available. Now that our funds are apportioned, it's time to distribute the apportionment by issuing allotments. Based on the apportionment, we can see that OMB apportioned two separate amounts, $80,000 for formula grants and $20,000 for discretionary grants. This is consistent with the conference report on the Appropriation Act that appropriated the $100,000. Since obligations in excess of either of these amounts would constitute a violation of the Anti-Deficiency Act, we are required by law to establish a control for each Category B line item in our accounting system. Since exceeding an allotment is a violation of the Anti-Deficiency Act, we know we have to create at least two separate allotments. So, let's record an allotment for the formula grants. First, we debit account 451001, apportionment available for distribution, current quarter, $80,000, and credit account 461001, allotments available for commitment or obligation, $80,000. The same steps would be followed to record the allotment for discretionary grants. Note again the balance between the resources and the status of resources. Once our allotment is established, there's still one more distribution and control step necessary before funds can be obligated. In HHS, we call this the allowance. let's check the conference report again to see how to allocate these grants. We can see that the formula grants are made up of two separate programs, $50,000 for social services and $30,000 for education. And the discretionary grants are made up of two programs, $15,000 for training and $5,000 for technical assistance. That means we need to establish at least two allowances for the formula grants and two allowances for the discretionary grants. To record these allowances, we would debit account 461001 allotments for $50,000 and credit account 461002 for $50,000. And we would debit account 461001 allotments for $30,000 and credit 461002 allowances for $30,000. Our equation still holds. Let's record the allowances for discretionary grants in the same way. At this point, all our funds have been allowed. Our resources of $100,000 equals our allowances of $100,000. In our made-up world, we got an appropriation on time and have made funds available to obligate. Now that we have distributed funding to the allowance level, we're ready to spend the money. Let's suppose the social services formula grant obligates its first quarter grants. The obligating transaction debits account 461002, allowances $12,500, and credits account 4801, undelivered orders, obligations unpaid, $12,500. The education formula grant likewise obligates its first quarter grants of $7,500 using this same accounting transaction. Our balances show that our accounting equation still holds. Toward the end of the first quarter, grantees drew down $5,000 from the grants payment system for their first quarter awards. Because we have not received an expenditure report from those grantees, we treat these draws as prepayments or advances. The proper accounting treatment is to debit account 4801, undelivered orders, obligations unpaid, $5,000, and credit account 4802, undelivered orders, obligations prepaid or advanced, $5,000. When the expenditure report is received, the proper accounting treatment is to debit account 4802, the $5,000, and credit account 4902, delivered orders, obligations paid, $5,000. Let's take a look at the status at the end of the first quarter. We've totaled the entries for each general ledger account and have totals for each one. These totals comprise our trial balance for the end of the first quarter and will be used to report our status on the Standard Form 133. So what is a trial balance? Well, it's basically a report listing the ending debit and credit balances in our general ledger accounts at the end of a reporting period. It's important, of course, that the total of all debits should equal the total of all credits. As we can see, our resources totaling $100,000 in account 4119, appropriations realized, equal the sum of our status of resources. Allowances of $80,000 in account 461002, plus $15,000 in account 4801, undelivered orders, unpaid, plus $5,000 in account 4902, delivered orders paid. I won't go over each and every transaction, as I think you get the point of how the process works. Let's jump ahead to the fourth quarter, and take a look at our status just as the fiscal year is coming to an end. We can see our budgetary resources have not changed. We still have our appropriation of $100,000 on the left side of the ledger. On the right side, the status of budgetary resources side, we can see that we have $575 left in the allowances account 461002. We have $68,425 in account 4801, undelivered orders, obligations unpaid, and we have $31,000 in account 4902, delivered orders, obligations paid. The sum of the status amounts equals $100,000. So we can see we're in balance. Here's what our trial balance would look like. Note that account 4119, appropriations realized, is $100,000. There are no balances in accounts 4450 and 4510, indicating that all funds had been apportioned. There is a balance in 4610 of $575, representing the balance in account 461002, allowances. This represents the amount that was not obligated and that expired or lapsed at year end. There's a balance of $68,425 in account 4801, indicating the amount obligated but unpaid at year end. There's a balance of $31,000 in account 4902, indicating the outlays or paid obligations that occurred during the year. And most importantly, our debits equal our credits. And also note that our fund balance with Treasury, identified by the proprietary SGL asset account 1010, is $69,000. And this matches the undisbursed balance Treasury recorded. Our checkbook balanced. All SGL balances are reported to Treasury using the GTAS system and are then crosswalked to the appropriate reports. Treasury publishes a crosswalk from the SGL accounts to the lines on the SF-133 and the Program and Financing, or P&F, schedule. Here's a sample of the crosswalk. Note that SGL 4119, appropriations realized, crosswalks to line 1100 on the SF-133 and P&F. Obligation SGL accounts 4801, 4802, 4901, and 4902 crosswalk to line 3010, obligations incurred on the SF-133 and P&F. Now let's take a look at an SF-133 so we can see how the amounts on the pre-closing trial balance crosswalk to the appropriate lines on the report. Here you can see the USSGL account source for several of the SF-133 lines. 4119 crosswalks to line 1100. The sum of all the 4800 and 4900 accounts sum to the total obligation on lines 2004 and 3010. 461002 crosswalks to line 2201. 4801 and 4901 make up the amount on the unpaid obligation line 3200, and 4802 and 4902 make up total outlays on line 4010. On the P&F schedule, you can see how these pre-closing account balances crosswalk to those lines. 4119 again crosswalks to line 1100. 461002 crosswalks to line 1940. The sum of the 4800 and 4900 accounts sum to the total obligation on lines 3010. 4801 and 4901 make up the amount on the unpaid obligations line 3200, and 4802 and 4902 make up total outlays on line 4010. As you can see, it's important to get the accounting transactions right, as these SGL balances automatically crosswalk to specific lines. If the transaction is entered incorrectly, you may end up with the wrong information in the year-end report and find yourself having to go back and change your accounting entries to correct any errors. Okay, we've reported on the pre-closing balances at the end of year one. Now it's time to do the closing entries. Upon closing, all paid obligations have to be closed out. The first thing we notice is that there are two new SGL accounts that have been added. 4201, total actual resources collected on the resources side of the ledger, and 4650, allotments, expired authority, on the status of resources side of the ledger. We start with our pre-closing entries at the end of the fourth quarter. On the resources side of the ledger, you need to expire the appropriation by crediting account 4119, appropriations realized, and debiting account 4201, actual resources collected, $400,000. Then you need to reflect the fact that $31,000 of your budgetary resources were paid out over the year. This requires you to credit 4201, total actual resources collected, for $31,000, and debit 4902, delivered orders, obligations paid, for $31,000. This reduces your resources to $69,000 and closes out your paid obligations. On the status of resources side, you need to reflect the fact that your obligational authority has expired. This requires a debit entry to the remaining $575 balance in account 461002, allowances available for obligation, and a credit to account 4650, allotments expired authority. This reduces allowances available for obligation to zero and changes the status to expired. Our unpaid obligations do not close, so they're just carried forward. Now, our $69,000 in resources equals the status of the resources of $575 in account 4650 plus $68,425 in our unpaid obligations accounts, 4801. This is our post-closing status. Though it's beyond the scope of this presentation, keep in mind that accounting entries continue throughout the 5-year expired period. At the end of the last year of expiration, any remaining balances are canceled. We've covered a lot of territory. We have tracked some of the major budget execution events through their accounting entries. We've learned what a standard general ledger is, what double entry accounting entails, what debits and credits are, what a trial balance is, and what an accounting transaction is. We've covered basic accounting transactions for budget execution events in 3 areas: receiving resources, controlling and distributing resources, and spending resources. These events are appropriation, apportionment, allotment, allowance, obligation, and outlay. We also discussed the accounting entries for expiration. It's important to remember that there is an unbroken chain of events that must be followed and properly recorded. Each succeeding entry is linked to the previous one. By properly keeping track of all our budget execution events, we can be assured that we are fulfilling the statutory requirements for controlling funds in accordance with the Anti-Deficiency Act, as well as ensuring that the information that goes into the President's budget is accurate. Thanks for listening. Check out the other videos.